You think one of the biggest benefits that all these investors see is the actual opportunity to be able to take out some type of collateralized loan against their security tokens?
That is a big benefit that I think people will be taking advantage of who currently cannot take advantage of. When you own real estate the traditional way, the old-fashioned way, you cannot take advantage of DeFi. You can't take advantage of the collateral in your asset. But you're absolutely right. The way I see it is that folks who are buying into digital real estate and putting those tokens in their wallet can now wrap that around the cryptocurrency and be able to do DeFi and really now generate income on two levels, right? You have income coming from your yield on your real estate asset, maybe that's 5 or 6 or 10%, and then you're actually loaning out or borrowing off of your collateral to generate additional income through DeFi, right? And this is down the road, but I think it's starting to happen, and people are starting to look at that very carefully, especially as those who are involved in DeFi right now. Before, when I talked to them, they just didn't understand real estate. So therefore, it was all about just DeFi off cryptocurrencies. Now that they realize that real estate would be a much more solid base for doing DeFi transaction, they're looking to figure out how they can now use that as collateral. Because think about it, if you just use Bitcoin as collateral for DeFi and it dropped 40%, I mean, all of a sudden your collateral is busted. You have to put more collateral in, right? So the whole idea with real estate is that won't be the case. The biggest downfall for real estate to be part of that process was the liquidity side. How can they sell it very quickly if they had to? And there are a lot of liquidity pools being generated right now to help you to liquefy your real estate pretty quickly.
I mean, how long do you think till kind of banks get comfortable with underwriting these tokens and providing loans against them for clients?
People look. I was just at a conference in Austin last week. I'm going to one tomorrow. This is what's on the table in terms of liquidity pools for providing mortgage financing for real estate, using that as collateral. As far as providing mezz debt for real estate, using it as collateral. And so they're looking at cryptocurrency as in that form of kind of a stable coin that provides that level of liquidity pool as well. So I would say that it's starting to happen right now. They're telling us by October, November, we should be kicking off the first few liquidity pools for real estate. And so that sounds very promising. I never like to wait because, everybody's promising something's going to happen in the crypto space and our industry. And I said, well, that's great when it does happen. But I think right now there's still a strong demand for people to start digitizing their assets because they want to be ready for the opportunity for liquidity. If you're not even digitized, then there's no way you can be visible, no way you can be ready, no way you have these options. But if you are digitized and now even without liquidity pools, you now have your shares amongst your current shareholders spread out on the blockchain. It allows them to be able to sell those shares whenever they want to, which they didn't have the opportunity to do before. It allows them to use those shares as collateral, which they couldn't do before. So I think things are really ramping up much faster than they had previous years.
And how are you seeing the current appetite kind of growing and also investor education to onboard new investors into the security market?
Well, I said, as more competitors come into the marketplace, as people like NASDAQ start to put billions of, at least hundreds of millions of dollars into advertising these opportunities, that's creating the awareness for building owners to say, hey, there's got to be something here. I want to learn more. And I think the education is becoming more and more prevalent and available just because you're seeing articles every day that pertain to real estate tokenization. And so I know owners are gobbling it up because you think about real estate where we are today. You've been in real estate for a long time. It's tough right now. I mean, to find deals that make sense is extremely tough. And I would say it's tough because the average investor doesn't have, the long tail of capital to sit on an investment at 3% and wait for it to become profitable. If somebody buying something at 3.5% cap rate has a higher chance on failure than they do of success, right? And so you think about all the money now, people are selling assets at 3.5 cap, and these big institutions are gobbling it up because they have low cost of capital and they have a lot of equity. but the person who just sold the asset is in a, kind of in a, has a decision to make, because now they have capital they're either going to pay capital gains tax on, or they're going to roll into a 1031 exchange. And so when you sell at a 3.25 cap, and what are you going to buy in that same area of real estate? So say apartments. It's going to be hard to buy anything that's, at a favorable cap rate, which means you're going to rush into buying something at 3.25 cap and hope that things get better. More than likely, you're putting yourself in a very difficult situation in terms of making success in the future. So I think people are looking for new ways in which they can make money with their capital. And by diversifying that equity into 25 projects instead of one, is one way of achieving that. And also by having these new capabilities of liquidity for your assets, being able to sell your assets, trade your assets, use DeFi against the assets to make additional income. These are all new ways to create earnings on a real estate investment that didn't exist before.